All right, VIPs. Hopefully you found your way into the app and our new story trading beta app only for our VIPs and found the link to this event. If not, anytime you pull it up, you always get the latest entry of what was recorded. Now, man, today it doesn't look great, right? Let's look at SPY first. 364, and really we got to go back to the 200-week moving average. It's slightly below the 20 DMA, and this is the line in the sand once again, battling that 200-week moving average, which is basically the low of the week. The low of the week here was, oh, it's not Friday, it's not shown right now, so I got to go to it. Moved it over by 1 day, but it's about 357. Okay, let me go back here. So we have actually a little bit of room to the downside. Let me just look at that candle there. It was 357.28, right around there, right? That's the 200-week moving average. That's what I'd like to see hold, but I really don't like the indications I'm getting from microcaps and risk assets and what we saw with Rumble. Um, I I don't know. I think that new regime I've been talking about has where we could be in for a long multi-quarter, maybe multi-year bear market with a lot of trouble for microcaps and risk assets. I think we're in that regime now, but hey, the 200-week moving average very meaningful. Now, what's happening this morning? Couple things I want to point out. First, TLT. Okay, TLT. This is shocking. I've been talking about this in the chat rooms. This is the first time I think I'm really bringing it up on air over here. This move is absolutely incredible. We're talking about tens of trillions of dollars lost in the last couple years, in the last year or so, in bonds. Yeah, bonds moving like penny stocks. This is where billionaires put their money. This is where pension funds put their money. And because relative historically, it's always been viewed as something that's safe, and historically, it's been a hedge against stocks. So you can bet that a lot of funds probably have some uh, uh, what's the word I'm looking for? Leverage. They probably are levered to it somehow or another on TLT. Okay. So we've already had a scare with some pension funds in UK related to bonds dropping. And my worry is that at some point, this bust in TLT can cause something similar to 2009 financial crisis and see the financial system kind of have a domino effect somewhere. I don't know the mechanics of how that would work, but that is a fear of mine. Now we're seeing the SPY bounce, so that's great. If you saw the analysis from Avi in a room this morning, he was looking for a bounce right at the open. Look, and it's right at the 20 DMA. It's trying to bounce right off the 20 DMA. So I'll take what I can get in terms of bounces because I would really like to see a bear market rally, maybe all the way up to the 50 DMA. I'd love it because I definitely want to raise cash. I'm worried about the state of TLT and the economy. So let's see if we can get a nice bear market rally. All right. Now, big story. Snap down 29%. Warning on earnings. Advertisers spending less money. In sympathy of Meta down 3.5%. Now, Snap is below the COVID crash low. Okay. Also, in terms of enterprise value, it's below the COVID crash low. That's pretty meaningful if you think about it qualitatively in terms of the state of the economy and where we're at. And one's got to wonder, is this representative of the whole economy or is this specific to Snap? But seeing these stocks, even Meta probably has its own company issues, but they've been below the COVID crash low for quite a while right now. So that makes me think harder about stocks like let's see, Google or Apple. Right? Let's take a look. Basically every asset is at or below the COVID, either the pre-COVID high or the COVID crash low, right here to here, which is why that's my target actually. For Google, $77 to $55. I think it's possible we see that if and when we break that 200-week moving average. For Apple, I have the same kind of outlook. Why should every single asset lose all of the fake gains because of the liquidity except Google and Apple? Doesn't make sense, right? Pre-COVID high to pre-COVID low, $55 to $80, $83 possibly in play here over the next several quarters or years if we break below that 200-week moving average. So Doesn't really look good to me. Any of this, I'm just hoping for a nice rally off either the 20 DMA or the 200-week moving average on the SPY. Twitter just been crazy, crazy volatility because there have been some reports that the federal government different wants to do some sort of national security review on all of Elon Musk's deals, right? Implying that they may even look at this deal to buy Twitter. So the stock took a hit, went all the way to $48. It bounced back up sharply here when a White House representative said, we don't know anything about this. Now, just because they say we don't know anything about this doesn't mean that it doesn't exist, all right? But I will tell you, I looked at the report, the initial report from the reporter who talked about this, the speculation, and that report, to me, it looked like too little, too late, right? It's saying here it is: Elon Musk company's Twitter deal may come under scrutiny as Biden administration mulls security reviews. Now, if you look at this, it says it's in the very early stages, and that they don't even know yet what kind of authority they would have to do it, right? So to me, it seems like a last minute scrambling. Maybe they thought the deal wouldn't close, and now, I don't want to get too political, but you can imagine for yourself why at this last minute they may want to try to look at this deal. But because it's so late in the game, I personally don't think it's going to come to fruition. I'm not. So that's just explaining all the volatility in the stock this morning. Um, and you can see Tesla actually a little bit of inverse moves compared to Twitter in there. It's hard to tell though. I really don't think the bulk of this down move in Tesla last couple days has to do with Musk having to sell Twitter shares. I think it is about the earnings. So I think it's overblown, that correlation. You can see Rum up here this morning. Right now, he must have said something because Chris Pavlovsky is on the Matt Kors show on Rumble right now, probably saying positive comments. Maybe he pushed something out on Twitter as well. So they're fighting back on that short report. I did pick some up yesterday. $5, a fundamental value we've been targeting on this. Not that it would go exactly to 5. I've always expected a sentiment premium in this stock, which is why I stepped in. I was looking for like capitulation volume. I didn't get in at 650. It didn't feel like capitulation to me. But the reason I got in at 670 to 680 was because the company started fighting back quickly, right? If they stayed silent, I would have expected another big volume down day and maybe gotten something closer to 6 or below 6. But because they started fighting back, I decided to step in late in the day, 670 to 680. And I'll be selling these pops. I'm playing this tight, man. This is just a trade for me. I do have a core position, which I'm losing money on now. But as far as the shares I picked up yesterday, playing it tight, don't have big aspirations. We talked about yesterday or a couple days ago that we got to ratchet down our expectations on what a good trade is. The days of 30 to 100% gains in a matter of hours or days. I think those days are gone, and we got to be happy with like 5 or 10% moves. So I probably already have that in the shares I picked up in Rumble yesterday. So I may be looking at selling those shares quickly over here. So besides that, we got a DRIO interview today, 11:30. I plan on asking very tough, insightful questions designed to pull out some nuggets. This is exclusive to our VIP community today and through the next week. So let's see if we can find something out and get a trading or investing edge in DRIO. So stay tuned for that, 11:30 a.m. Log in early to the app because you got to grab the Zoom link and open up the Zoom link in your browser to open up the event. So looking forward to that. Kodak, I haven't talked about in a long time. Just want to acknowledge I do still have a small position in this. I did end up selling a lot of it, but very strong chart this year. Look at all these double bottom, triple bottom, multiple W patterns overlaying each other. So, if you've watched our past videos, you know the thesis on Kodak, and, probably not a bad bet to hold a little bit of this long term, see how that plays out. Maybe I'll buy a little bit going into earnings because they really surprised big time to the upside last quarter in terms of their being profitable all of a sudden, switching to profitability. And they have a lot of assets as well that may not be reflected in the stock price. So Kodak may be worth another look soon. AIRG, Monday night, we got our weekly pre-market prep going. Monday night, 9 p.m. weekly Zoom meeting. I'm sorry. At least we'll have it this week. Monday night, we have the CEO of AIRG, AirGain. This is in the automotive antennas and things like that. I have been vetting this a little bit. Talked to the CEO over the last few months. I have like IR firms reach out to me all the time, and I'm inundated with requests. Hey, we want to present, bring the CEO to your community, and I turn most of them down. This past a couple stages of my vetting process. Now it's been a month and a half since I last talked to them because we scheduled it like far in advance. So honestly, I don't remember all the details except that they passed my vetting process. So it may be worth it to step in. And it turns out Sanjay from our community is familiar with AirGain, and he'll be doing a little homework in preparation for Monday night. Now, Monday night as well, I hope to get Julian to talk about NVEC. The stock was up big yesterday. He seems very, very bullish on it. He put the thesis in the VIP trading room, but I'd like to see this in person, like to talk about it in person to get an idea of what Julian's talking about. So Monday night, AIRG CEO and possibly NVEC. Just want to point out QUIK yesterday. I was hoping for a close over 625. We didn't get it. They got another deal yesterday. And this is one that I think might be safer and might buck the market trend because this is a Department of Defense contract, 78 million out of 72 million. So this one is one of the microcaps I feel comfortable holding. I've actually sold a bunch of other microcaps, especially the illiquid ones recently. You can see RELL hit a new all-time high yesterday, and although the pre-market prices don't count. And hey, if I had a huge position in this, I'm a seller here at the all-time high and hopefully looking for a pullback. I don't have a huge position, so I'm just going to hold this. And, who knows? Maybe for years. I have a small enough position just to hold it and not worry about trading it. Air went over $20 yesterday. I think the RSI is low enough, and it looks like a major cup and handle forming over here. You can see this on the 6 month. Actually, that's one cup and handle that's trying to form. Now, if you go back a year, this pattern looks very similar. The 1 year chart looks very similar to the Clearfield pattern that we're on top of before it exploded. That was like right here. Like, actually, it's very, very similar to the air chart, right? So imagine Clearfield at like 73 is where air looks like right now, right? Doesn't mean that kind of move is going to happen, but fundamentally, it makes sense that this stock can see the 30s at some point in the next year or so. So to complete that cup at like $25 and then maybe a handle, maybe not. Clearfield didn't even have a handle. It was a cup breakout without a handle. But like 30 plus, I think, is possible once they get these other large customers on board for air. So good news on air and RELL. Man, my allocation's not right, I guess. I have them, but not huge positions, just holding them. Probably overweight DRIO, but hey, that's how it goes when you're a little bit of a gambler and you're betting on the speculative stuff. But I'm happy to hold air and RELL from really good prices. So what else? XXII really disappointed yesterday. Let's see if we can close above. See, it's the close that matters. When you're looking at the daily moving averages and the weekly moving averages, it's the end of the candle that matters. And yesterday, I thought we had broken out. I ended up buying more when it pulled back to 125. I'm like, yeah, it's going to hold 125, but it didn't. And now we're below the 50 DMA. So listen, you got to admit, that there's a possibility of downside to the 20 DMA, which is 104 and rising, but they do have LD micro next Wednesday. So that was my thesis. And I'm sticking with it that event anticipation to LD micro can maybe cause it to break the 50 DMA, or maybe the event itself is the trigger which causes it to break the 50 DMA and move towards the next resistance at 150, which is a 20-week moving average. And plus, you can see all the candles here that was acting as support previous, now resistance. So that's all I've got. Let's see. I see a bunch of green. So SPY is really fighting. SPY is really fighting this morning. It's at a critical level, by the way. Both in Avi's analysis and I'm hearing Rex as well. Both of them are saying today is a very, very critical key moment in determining the direction of the market in the next next period. So, and that makes sense, right? We're at this critical 20 DMA support, right below it, critical 200-week moving average support. So this is a key time. And look, for me, this is just a matter of trying to take advantage of market pops bear market pops to reduce positions on things that are riskier and prepare for what I think could be a very long bear market, unless you get some sort of surprise like the Fed pivoting, which I would welcome any day. All right. And with that, we see RUM at 720. So I'm going to take off so I can sell those 680 shares I picked up yesterday and be happy with that small gain. That's what you got to do these days. Be happy with smaller gains. Thanks for tuning in. We'll see you at 11:30 a.m. Please try to log in at like 11:20 a.m. Just to get the technicals out of the way with the app and everything. And we'll see you soon.